Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can understand what we see in the global landscape. Again, I've talked about this all year and a lot last year about Greece back in the limelight again. Ultimately, Greece is going to leave the Eurozone, in my opinion. Whether it's this year or next year, every time they own a payment or a payment is due, I should say, they basically come up with another story. Let's negotiate again. We need to get rid of Greece, or I should say the Eurozone needs to get rid of Greece. And ultimately that will help the Eurozone. There'll be other countries that obviously are in not great financial situation like Spain and Italy. Ultimately, the strong always survive. The U.S. economy, by the way, is doing quite well. We're seeing GDP growth, we're seeing earnings and sales growth, we're seeing consumer saving, and we're seeing consumer spending. In fact, we're starting to see great reductions in consumer debt, which bode well for the longer term. The first half of 2015 was okay. I think a little bit slower because of the winter. But I think ultimately the second half of this year is going to be pretty decent GDP growth. Again, I still think we're going to see between 2.5% GDP growth in the U.S. this year. Probably Europe will grow somewhere maybe around 1%, or the Eurozone, and we're probably going to see some of the other emerging market economies between 4 and 6% on average. Again, good growth, not stellar, but good growth. Ultimately, it's what our politicians do in this country that are really going to dictate our growth. And who knows? In a year from now, we'll have a new president. Maybe that person will be pro-growth policies and actually help out everybody in a meaningful way. We like what we see. We do not see any recessions on the horizon right now, and our indicators are very good, usually about 9 months out. We look at these every single day, along with all of our investment positions in every client account, and we like what we see. We're fully invested. We're in our equity-based positions or our sector allocation positions. We are holding a little bit more cash right now, so if you're a client, realize cash sometimes is a good way to go because we've reduced some of our bond exposure overall. We see interest rates slowly moving up. We're about 2.4 on the 10-year. And ultimately, I think by the end of the year, we could be at 2.5 to 2.75 on the 10-year, which means bond investors who have intermediate to long-term maturities, really anything much more than 3, 4, 5 years out, are going to get hurt. We have a lot of clients that are happy campers because we're doing the right things with their money. If you're a client and you have a question, call our office. If you're not a client and want to become a client, or if you want to refer your friends, family, or business associates to our firm, we always appreciate your business. Call us, schedule a consultation. There is a difference. We do invite you to experience it. Have a safe and profitable day.